Is that rally and the broader market bounce justified? Well, joining us now is Aswath Damodaran, Wall Street's Dean of Valuation, Professor of Finance at the NYU School of Business. Always good to see you. So NVIDIA looks stretched. Does that mean you sell it?
I think it's a dangerous game to play. If you don't own it, the only way you can sell it is to short the stock, and that's a recipe for disaster, especially leading into an earnings report. And the way to think about NVIDIA is, are you a trader? In which case, you buy at a low price and sell at a high price, and NVIDIA might be the game you want to play. Are you an investor? Where you're buying based on earnings and cash flows. NVIDIA is an amazing company, great growth, amazing cash flows, superb margins, but you're paying a premium price even given all of those pluses. So I think you've got to be honest with yourself about the game you came to play.
So, and broaden that out for the whole market. You make an interesting point here. You say hubris is the greatest sin in investing, the excessive pride. And when people use the word bubble, it tends to be a sign of hubris. Explain.
I think that when you use the word bubble, you're essentially arguing that the rest of the market has lost its mind. And that, to begin with, is a sign of an ego that's out of control. When you think something is overvalued, all it means is you think it's overvalued. It doesn't mean it's overvalued. It doesn't mean you have the truth. You have your truth and you got to act on it, but the rest of the world has their own truth. So my view on investing is make your own judgments, but don't pass judgment on other people buying or selling stocks because you don't like what they pay.
So in your judgment, among some of the mega cap stocks, what's a better deal right now?
I think Amazon is a better deal than NVIDIA as an investor. If you wanted to go with the mega tech, I think Amazon is a better buy than NVIDIA. It might not play out that way as a trade, but I think given the earnings and the cash flows, if I had to buy a stock now and you force me to buy a big tech, I would rather own Amazon or buy Amazon than buy NVIDIA right now.
So we have some interesting points about NVIDIA being overvalued, perhaps, how to invest in the stock market in general, some of the factors that investors should be looking at. If we are specifically looking at the most recent price action in NVIDIA, we can see that the stock overall is running into a bit of a headwind here, right into the $130 mark. These questions about whether or not Amazon is a better investment currently than NVIDIA are reasonable questions to be asking. It does depend largely on what type of stock you're looking to invest in at the moment. These are obviously very different companies. We do lump them together due to the fact that they are both in the Mag 7. They're both technically technology companies, I suppose you could say. But, the type of market that we're dealing with here is very, very different. I mean, one's obviously an e-commerce retailer. You can say that Amazon does invest large portions of its energy and time and focus into the Amazon Web Services space, AWS, and this is generally, in many cases, the part of the earnings report that we tend to focus on the most. But in general, I do look at the stock as more of a retailer, and if you're looking at specific exposure to the technology space and the artificial intelligence space specifically, I don't know if Amazon is really a proper substitute for NVIDIA. But as things currently stand, we are running into headwinds here right around this $130 mark. We can see some potential support here forming right around 120. People know I don't really like to focus on these big round numbers, these handles like 100, 150, 120, things like that very often. But this is sort of where things are shaping up at the moment, given the fact that we do have the prior price highs coming in from the August 1st trading session. Roughly these posted at 120.15. And then in addition to that, we also have the rising 20-period exponential moving average, which is this yellow line here, coming into contact with roughly the same area. So we do have a bit of a confluence here of technical price indicators that could be used for buys, long positions that are based on bounce from support zones. So one area to the downside that I would continue to watch does come in at 120. If we see a break below there, I think that we could see a period of sideways consolidation, given the fact that we would then be moving back into the exponential moving average cluster itself. Moving out to the daily timeframes, we can see that there is some confluence here between the way that the 4-hour moving averages look, in addition to the daily moving averages. So as things currently stand on the daily price chart, the 20-day exponential moving average comes in a bit lower here, posting at roughly 117.90 at the moment. So as we can see here, this moving average is rising and it is crossing above now the 50-day exponential moving average, which is a bullish signal on its own. And then if we look at the indicator reading, some interesting developments start to develop as well, because we can also see that the relative strength index has now firmly crossed above its prior downtrend. So essentially what this tells us is that NVIDIA has broken the prior negative momentum trend that was governing share prices all the way going back to the 140.76 all-time highs that were posted during the June 20 trading session. So as things currently stand, there is still a fair amount of upside price momentum that is influencing this stock. However, we do have to consider some potential movements here to the downside. Roughly, the area that I would first be watching does come in at the 120 level. On the shorter term time frames, we can see some potential bounces there. But if we do pull out to the longer term time frames, there's a bit less of a confluence given the fact that the exponential moving average cluster rests slightly lower on the chart itself. So as things currently stand, the bias does remain positive, but we do have to expect to see somewhat of a period of retracement given the fact that share prices have seen such an impressive rally here in such a short time frame. If we do see prices break above the 130 mark, I do expect to see some level of optimism to start to reignite for this stock. Ultimately, that would probably put the focus on the stock in the financial news media. Once again, would probably be a major headline. We see NVIDIA break above the 130 mark. So that would be a positive development as well. But at the moment, as things currently stand, it does look as though we're going to need to see a bit of a period of downside pullback or retracement so that these current price moves can sort of work themselves off and establish themselves for another run higher. If we do sort of pull into this price chart a bit, one other factor that we can note here is the declining trend line here that has been in place ever since the stock posted its all-time highs on June 20. As we can see here, this area was retested again during the July 11 trading period, and we are currently running into this area now for a third time. So if we're moving in here, we can see some fairly strong price movements as the stock is sort of trying to breach these areas, trying to attempt to breach this trend line from the bottom. And at the moment, we are running into some resistance, as we can see here. So overall, these price candles here are showing a bit of slowdown or stalling in momentum now that we are running into this trend line. So if we are able to break above the 130 mark, it would be a fairly significant move higher, given the fact that we would no longer be viewing this downtrend as valid. So here's the current market analysis for NVIDIA Corporation, stock ticker NVDA. Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.